Hi traders, welcome to our weekly top-down analysis. So for this episode, we're beginning with step index and stay tuned for trading setups with your entry prices, stop loss, and take profit levels. So we are beginning with step index, and as always, we begin analyzing from the weekly time frame by marking our supply and the demand zones. Taking our rectangle, we can see that that is a supply zone where price has been pushing down for weeks, and it's now headed to our demand zone. Therefore, our bias from the weekly time frame is very clear. We are going to be looking for selling opportunities from this supply zone until this demand zone. Now, heading over to the daily time frame, we can see that price reacted from that FVG, and then now we have a new break of structure right there where price went to go and mitigate the order block, and then we are pushing down. So marking my take profit levels, heading over to the 4 hours time frame, we can see that price reacted from this FVG and then pushed down, broke this support level, and then went back in to go and mitigate the order block. There is another order block, but price did not mitigate that order block. Instead, it did not mitigate the internal break of structure. However, it mitigated this general break of structure, and we are pushing from there. Now, currently, we have a new break of structure right there, and then we have our internal break of structure and our order block from that break of structure. Heading over to the 2 hours time frame, which is my entry time frame, as I mostly take swing trades for volatility indices. So we have an order block. We have an order block right there. And then we have that internal break of structure. We have that internal break of structure. Now, the coordinates I'm going to be positioning at that order block right there, which is the internal break of structure, and we have the general break of structure here. So we have that general break of structure right there. Now, you can go ahead and place a sell limit on step index with your entry price at 7897.9, stop loss at 7927.6, and take profit at 7859, and always apply proper risk management. So I'm anticipating for price to go and mitigate my order block and then continue pushing down since the bias is bearish, as I'm always looking for selling opportunities on step index, as usually this is a bearish market. Heading over to volatility 101s, if we minimize, we can see that price has been reacting, pushing from that supply. And then down here, we have our demand zone. We can see that price is still far from that demand. Therefore, my bias from the weekly time frame is still bearish. I'm going to be looking for selling opportunities until price decides to come to this demand zone. Heading over to the daily time frame. From the daily time frame, you can see that price broke this low and then went back in to go and mitigate that order block. Now we have this low that is unmitigated. Therefore, I'm going to be positioning at that order block. We have that order block, which was caused by that break of structure. That break of structure, and then we have our swing low at that point. Heading over to the 4 hours time frame. From the 4 hours time frame, price is still far from that order block up there. Therefore, I'm going to be leaving that pending for now and then zoom in to see where price is reacting. Currently, as you can see, we have a resistance that is forming here where price has been trading. It has been failing to break that resistance. Now, if I am to zoom in, I can see that we had a change of character here. That is a change of character to indicate that buying momentum is over. Now, price reacted from FVG. Price reacted from the FVG and then we are pushing down. So right now, we have a new break of structure. We have a new break of structure with the order block at that level right there. So there is the order block. Heading over to the end time frame, which is the 2-hour time frame. We can see that price reacted from that FVG and then we are pushing. However, we have this general break of structure here. And then we have that order block emanating from this internal break of structure. So I'm going to be positioning for that order block, which was caused by that internal break of structure. And then I'm seeing this level as my liquidity level that price has to clear to go and take me into that order block. Now my coordinates for the sell limit, you can go ahead and place a sell limit on volatility 101S with your entry price at 805.13, stop loss at 833.68, first take profit at 742.66, second take profit at 668.74 and always apply proper risk management. So I'm anticipating the price to go and sweep that liquidity that is seated there and then take me in and then proceed pushing since the bias is bearish. So that is what I'm anticipating. That is why I am setting a trap at that order block. Now moving over to volatility 100. From the weekly time frame, the bias is very clear. We can see price is forming lower lows and lower highs. Therefore, it's clear we are in a downtrend. Now, marking my key levels, I have that supply zone where price has been pushing for weeks. And then I can see price starting to create a demand zone right here. So from the weekly time frame, I'm still going to be placing for sale position until price decides to break through this demand. Heading over to the daily time frame. From the daily time frame, studying the price action, you can see price reacted at that order block and then again reacted from this internal break of structure, the order block. Now the only unmitigated order block is that order block from the daily time frame. Heading over to the 4 hours time frame. From the 4 hours time frame, adjusting, we can see that we have an order block there that has been unmitigated. And then we have that break of structure right there. Now I am seeing these levels, this resistance levels as my liquidity area that price has to sweep, because all these order blocks that price is creating here, as long as my main order block is not mitigated according to my strategy, that is just liquidity, trend line liquidity. Heading over to the 2 hours time frame. From the 2 hours time frame, let me place my coordinates. So you can go ahead and place a sell limit. So therefore this one you're going to have to wait for it, since price is still far from this order block. So you have to be patient with this trade. So we are going to place a sell limit on volatility 100 with your entry price at 506.09. Stop loss at 560.59. Take profit at 251.75 and always apply proper risk management. Therefore, I'm anticipating for price to sweep this liquidity, go and take me in, and then proceed pushing down since our bias is bearish. I'm seeing that there is a lot of liquidity that is seated here because of this equal highs, this resistance level. I'm anticipating for price to sweep this liquidity that is seated here. All right, traders, that's it for this episode. If you did find the episode helpful, consider subscribing to the channel, share it with your friends and family, those ones who are interested in trading. Have a profitable trading week and see you next week.